It's time for our weekly update. Standing by are Heyling Chan in Hong Kong and Nemo Kim in Seoul. First, Heyling, the International Monetary Fund publishes annual review of China's economy for the first time, I believe, since 2006. So tell us, what does the report say?
Yes, Sherry. Well, China had blocked publication of the IMF report since 2006, with valuation of the yuan being a flashpoint between the two sides. Now, the current report paints a grim picture, saying that the country's trade surplus will balloon unless the central government takes steps to boost domestic consumption. One way of doing that, it says, would be to let the currency rise to its real value. But the review appears to have been toned down to appease Beijing, and an estimate of by how much the yuan is undervalued was notably absent. And China still doesn't think the report is accurate. It says the economy's growth at breakneck speed, rising wages and financial reforms will drive down the trade surplus. Beijing also insists the yuan's value is much closer to equilibrium now than ever before. China's biggest producer of aluminium has agreed to buy stake in mining giant Rio Tinto's iron ore project in West Africa. The deal will see Chalco, the listed arm of state-owned parent company Chinalco, invest $1.35 billion in the project in Guinea in return for a 45% stake. Rio's ties with Beijing were strained last year when 4 of its workers in China were arrested on suspicion of commercial espionage and taking bribes. The company had also disappointed Chinalco by pulling out of another deal. This week's agreement will help ease those tensions. Analysts say the move was designed to diversify Chalco's interests beyond its core aluminium business, which has been unstable over the past year. The parent company of China's Geely Automobile has received the nod from the central government to buy the Volvo brand from Ford. Geely plans to turn Volvo around by pumping $900 million into the Swedish company on top of the $1.8 billion purchase price. In the works is a new manufacturing plant in China that would nearly double Volvo's capacity. Several Chinese cities have been campaigning to be the site of the new factory, including Beijing, Shanghai, and Chengdu. Geely plans to use Volvo's foreign name to produce luxury brands for Chinese consumers. But analysts warn that Volvo will also cause problems for Geely because it's been losing money in other parts of the world.
Heyling Chan in Hong Kong, thanks for that.